Hey traders, welcome back to my channel. My name is Desmond Samuel and I'm back with another episode of our weekly Forex Forecast. So without wasting any much time, the first pair on the list is the Aussie dollar, the AUD/USD. As you can see on the weekly time frame, we have some sort of descending trend here. So we're making series on lower lows and lower highs, and talking about the current price action, the most recent one, the most relevant one at the moment. So we came on here for some form of a third touch of the trend line all the way from these highs here. So this was more or less so this was the first touch, second touch. So this is the third touch here. And there's a principle in trading that states that the third touch of the trend line always does the trick. So as you can see here, this was the third touch that sends this market all the way back down here. And then this happened around the supply level somewhere around here, which I have actually spoken about, in recent times. If you really want to go over that, you can as well scroll through my recent episodes of the weekly Forex Forecast. So scaling down to the daily time frame, this is how things look. So we are just going to go ahead and then highlight our most relevant levels. I'm talking supply and demand levels here. So in this case here, we have a whole level somewhere around here like this. So we have a whole level here. So now this is exactly where we want to be waiting for price to tap into before I actually go ahead and then continue selling this guy. Because I do see that the dollar is starting to gain some momentum to the upside, and I kid you not, this could easily break out to the downside from the way things look. So now, if you actually parade it from your swing low, from swing high to swing low, you can see that this lapses, perfectly with the Fibonacci level. So what we need to do is wait for the market to tap into this region somewhere around here, and then look for a decent 4-hour bounce. If it doesn't give us a flat pattern, we just look for a 4-hour bounce. All right, so either entry confirmation goes here. Just look for a decent reason as to why you should actually sell from here and then sell. So my prime target for Aussie dollar remains this low here. All right, so always target your recent lows if you're selling, and always target your recent highs if you're buying. All right, so that's just that for the Aussie dollar. The next pair on my list is the euro dollar. So EURUSD also has a similar breakdown. So EURUSD also has a similar breakdown. So all of the US dollar best pairs are actually collapsing at the moment due to the momentum being gathered on the dollar. Alright, so this is the euro dollar in a nutshell. I actually did like a top-down analysis in my Telegram community. By the way, if you check in the pinned comment here, you find it there. So just tap it and then come over. So long story short here, for the euro dollar, we're actually starting to melt down, breaking right past a major key level here. And as you can see here, so we're actually we have some form of a breakout into this point here. However, I would strongly advise against selling from here, because in recent times I've actually seen this thing happen so many times, and the market just ended up folding all the way back up. Right, so in this case here now we have two scenarios that could easily play out. We could easily have the market pull back into this demand level that I highlighted in a previous, the most recent episode of our weekly Forex Forecast, or we could actually have the market continue lower. Right, so two things you need to look out for here. Once you get onto the daily time frame, you have to actually identify two things here on the daily time frame. So first of all, we have two levels to work with here. So we have this demand level, this supply level here rather, and then we have this key level here. All right, so two things now. It's either the market pulls back into this level here, or it continues heading lower and then creates another supply level somewhere around here, in the sense that if the market does not actually come back to this point, in these coming weeks, which I actually prefer to come into that level, but if for some reason that doesn't happen and the market just keeps falling, what you need to look out for is another supply level somewhere around here. Okay, let the market drop, consolidate, give us a decent entry confirmation, then we'll actually go ahead and then short this guy. So obviously, and so like I said recently, so whenever you're selling, you should always target your recent low, and then your buying should look for a recent high. Okay, so for the euro dollar, it's very simple. If we do actually see a decent pullback to this created supply somewhere around here, then we'll actually short this guy, and our prime target will always be the blue bar. However, if for any reason this guy continues to dip lower and then comes and then forms a consolidation somewhere around here, around this level here, then my prime target will always be this, all the way from to this 2022 lows here. All right, so that's just that for the euro dollar in a nutshell. The next pair on my list now is the pound sterling. So GBP/USD also has a very similar setup compared to the euro dollar and then also the Aussie. So for GBP/USD, it's a bit clearer in the sense that we are still within range. So what I'm actually looking for is very simple. Remember from our recent episode, I actually spoke about the third touch weight, which is actually happening currently on a downward trend line trajectory. However, now in the case of the case of the pound here, I think I should actually trigger something from the monthly time frame. because I was actually very skeptical about this guy, because I saw something funny happening somewhere around there, and then I was like, you know what, I might as well just give this guy some time, and then even if I'm taking any trade of this guy, I have to be extremely careful. All right, so we see that from top here all the way to this point here. If you actually draw this guy carefully, you can see that the market is still trading outside of this trend line here, which is quite dicey. Okay, which is quite dicey. So whilst you're trading, let me just go on to the time and show you guys how this looks. So whilst you're shorting this guy, in the coming weeks, you need to be really careful, because you have a trend line, a descending trend line that has been broken out of, and then this is currently more or less a breakout retest. All right, so you must be careful, because provided that this guy remains outside of this trend line here, there's every possibility that we could actually continue higher. Okay, now in this case, let me just get rid of this guy, but please, when you're selling your pound sterling, please take notes. All right, so long story short, here on the pound sterling here, what we have to see on the daily time frame is very simple. All right, a decent pullback to this already created supply level somewhere around here, give us some form of entry, but be it a counter trend line break, or be it a decent bounce somewhere around here, and they will actually go ahead and short this guy. So my prime target will be this blue bar. However, I will take out some money once I see that the market has actually approached this trend line here. All right, so once I see that the market has approached this trend line here, I'll definitely take out some money. So whilst you're selling this guy, you might as well just want to target these lows here. All right, so let me see, just target these lows, all right. So that's just that for the partner. So because this trend line here is still very short. Remember, this trend line is coming all the way from the monthly time frame. It's quite significant. All right, so whilst you're selling this bounce in the coming weeks, after we see a decent pullback here, you should always target your green bar here, take out some money here, and then subsequently, the blue bar is the prime target. All right, so that's just that for the pound sterling. The rest of the pair. So the USDCAD has actually broken out of this long-term range. It's been in this range since like forever, and for some reason we're actually starting to break out, starting to show some form of momentum to the upside. Now the breakout initially happened with this monthly engulfing pattern. This monthly engulfing candlestick that engulfed 1, 2, 3, 4, 5, 6, 7, 8. All right, so practically 8 months worth of trading, was engulfed by one single month, which was the month of October. So as it stands here, we're actually trading outside of this range here, and if you prorate it, so there's a principle that states that the total amount of pips calculated in here, once you break out, we have to run into the tune of the exact same amount of pips. So you can see that this is estimated approximately around the monthly highs around here. All right, around the 2020 highs. All right, so what my call is for the USDCAD is very simple. Once we scale down to the weekly time frame, we have a prime target. All right, now we have a prime target on the monthly time frame. However, we have to take our trades on the daily time frame. So it's very simple. So what we need to be looking out for is quite simple. Right? Come on here and then wait for the market to give you a decent pullback. Right, decent pullback into this region, maybe somewhere around here. Okay, just wait for the market to give you that one leg deep into this point here, one leg deep into the demand level. Then you can actually go ahead and then start looking for buying opportunities. All right, so my prime target remains all the way at this green bar here from the monthly time frame. Please take note. Okay, so the next pair now on my list is the NZDCAD. So let's talk about NZDCAD now. All right, so NZDCAD also has a very beautiful information to the downside. Practically all of these pairs are starting to break to the downside, and for that reason here, I'm actually very bearish on the NZDCAD. Right, so it is very simple. We were actually bullish on this guy for some time. However, for some reason we actually mounted all the way back down because of the pressure that the dollar is mounting on the New Zealand dollar. So now as you can see here now, we have actually broken out of this upward trend line here, and then we're starting to point to the downside. So on the way to the downside, the market actually created a supply level somewhere around here. So what we need to do is very simple. After the market creates a supply level on a major time frame, we need to scale down to the lower time frame. All right, find a decent entry opportunity somewhere around here. So in this case here, what I need to see is a very simple thing. I need to see the market pull back into this yellow bar right here. Give me that decent pullback into this yellow bar right here, and then I'll be very confident about shorting this guy. So my prime target, first level target, is this green bar right here, and then once this is breached, we have space all the way down here. All right, so if you found value so far, I urge you to subscribe to the channel and turn on the bell notification, and then leave a like and comment. All right, so now the next pair on my list now is gold. So gold on one hand has been very bullish. The sweetest of the trade, like literally gold has been so decent. All right. So long story short, yeah, I called out gold somewhere around here. I've been calling out gold to the upside for quite some time now, and it has been a very beautiful trade. This market just came here to test a trend line. So let me just show you guys real quick what that trend line was, and show so that I show you guys how you can actually go about plotting your trades as well. All right. So now for gold here is very simple. Just I think gold came in here to test this trend line. All right, so it came to test that trend line. So this is exactly what happened here on gold, right? So this was more or less the first touch, second touch, third touch somewhere, and then we are actually headed high to our prime target, which happens to be $3,000 per ounce. However, we have to first of all get clear of 2,790. Once this coast is clear, we have space to run through to all the way to $3,000 per ounce. I see no reason as to why gold will not rally into $3,000 per ounce. It's clear, and there is absolutely nothing stopping it. All right. So the next pair on my list now is S&P 500. The S&P for some reason has actually failed to come in lower, but I'm still waiting for it to come in lower because this is practically the place that will be most profitable and most sensible to go long from. I see no reason as to why I want to buy S&P mid range. That is a trap. I see it as a trap. So two things may happen. So it's either we actually break above here and they give me some form of entry confirmation, or we dip lower here and then test this demand level. But I favor this guy to the downside to the tune of 80% because I have to see the market coming and test this demand level principle, technical analysis principle here. We need to see the market test this demand level here before we actually go ahead and then start looking for buying opportunities. Or we see a decent break above here and then pull back, we continue higher. But I'm not going to sell this guy for any reason. All right. So, and I urge you guys to also sit on your hands, because a large part of being a profitable trader is your ability to be patient, to do nothing most of the time. All right. So the next pair now on my list is I think it's the exact same thing for. So the DAX, the German 30 also has some room to the downside. So the DAX now, so the German 30 also has some room to the downside. So what I'm actually patiently waiting for on the DAX is just one more dip to the downside around this 18,000 region. That is exactly where I want to be going long on NASDAQ. On the DAX index, I see no reason as to why we should actually not coming into there. And if for any reason we actually fail to come lower and then we actually continue higher, it's very simple. Just wait for a decent break above here. But nothing must make you trade this guy mid-range. It's not, there's nothing in here to trade. All right, so just wait for this guy to give a decent bounce off of here, or a decent break above the high. All right, so my prime target for the DAX index remains 21,008 basis points. All right, so the next pair now on my list is the NASDAQ. NASDAQ also has a very similar, trade setup, but I favor NASDAQ most because it's a bit more decent, it's a bit more appealing to me. So sorry about that. So long story short here, NASDAQ has to come into 19,800. I have to see NASDAQ at 19,800 before I actually execute this trade. All right. So come next week or 2 weeks, I don't know how long this will take to play out, but the first thing we need to see on NASDAQ is a decent bounce back, a decent pullback into this 18,000 region, somewhere around here, into this 19,800 region, somewhere around here. Then we'll actually blow all the way through to 22,800 basis points for NASDAQ. All right, this is my prime target here. Okay, so to wrap this off here, we have to talk about the dollar index. So what's happening on the dollar index is very explainable. It's very simple. We are simply just continuing higher. So this was the initial trend here, which was from swing low to swing high here. So the market just came here to test and balance out all the Fibonacci points, and then it now gave us some form of a demand level somewhere around here that the market just came and then tested and they just blew through. All right, so long story short, now scaling down to the lower time frame, I do see the dollar index pulling back into the regions of about maybe 104 region. So somewhere around here like so. So we need to see market pull back in here because the rest of the pair have to pull back anyway. So we could even see the dollar index come into regions of about maybe 104. So once we see that decent bounce, back into 104, we can actually see this guy continue higher to our prime target, which was always 115. All right. So that brings us to the end of this episode of our weekly Forex Forecast. Thank you so much for sticking to the end. My name is Desmond Samuel, and please leave a like and comment, subscribe to the channel, and turn on your bell icon. And then I hope to see you in my Telegram community. Have a very profitable trading week ahead. Peace out.